So, you're a new mortgage loan originator, and you're getting ready to tackle the NMLS exam. If that's you, you are in exactly the right place. We're about to break down one of the most important and honestly one of the most confusing federal laws you need to know cold, the Home Mortgage Disclosure Act. You'll hear people call it HMDA. So let's dive right in. To get us started, let me ask you a quick question. Just think about all those regulations you're studying right now, RESPA, TILA, all the big ones. Out of that entire pile of rules, which one do you think lenders mess up the most often? I'm willing to bet the answer is going to surprise you. It's HMDA. Yep. According to the Federal Reserve's latest data, violations of Regulation C, which is just the fancy name for the rule that implements HMDA, made up a whopping 38% of all federal compliance violations. Just let that sink in for a second. More than a third of all the issues regulators find trace back to this one law. So yeah, this isn't some tiny footnote in your textbook. This is the big league. So what is this law that causes so much trouble? Well, the Home Mortgage Disclosure Act, HMDA, has actually been around since 1975. When you boil it all down, it's really a data collection law. It forces financial institutions to gather and, more importantly, report very specific information about every mortgage application they get. Sounds simple enough, right? But as you're about to see, the devil is absolutely in the detail. Now, you might be wondering, why does the government want all this data anyway? It's not just to create more paperwork, I promise. HMDA is built on three really important ideas, or pillars. The first is to see if lenders are actually meeting the housing needs of the neighborhoods they're supposed to be serving. Second, it helps government officials figure out where to best invest public money. And third, and you're going to want to star this one for your exam, it helps regulators sniff out potential patterns of discriminatory lending. That's a huge one. All right. Here's our game plan for this guide. First, we're going to look at the big picture of HMDA. Then we'll get into the nitty-gritty of who has to report and what they have to collect. After that, we'll go through the top 5 most common reporting errors, so you can avoid them. And we'll wrap up with the absolute keys to staying compliant. Okay, let's dive into our first section, the big picture. I really want to hammer home why this isn't just some random exam topic, but something that's truly a cornerstone of your entire career in the mortgage world. Okay, so here's the bottom line. The data that you and your team collect under HMDA, that is the very first thing federal examiners are going to look at when they walk in the door. It's the foundation for all of their fair lending reviews and for something called the Community Reinvestment Act, or CRA exams. If your data is wrong, their whole analysis is off, and that can snowball into some really serious problems for your company. Okay, Section 2. Let's build on that and talk about who actually has to report this stuff and, what exactly they're reporting. So the first question you got to ask is, does this even apply to you? Does the bank or the mortgage company you're working for now, or maybe the one you want to work for, even fall under these rules? Because believe it or not every lender has to do this. For places like banks and credit unions, there's this 4-part test you gotta know. And listen up, because this is classic NMLS exam stuff right here. They have to pass an asset size test, have a branch in a major metro area, do a certain number of loans, and be federally insured or regulated. They've got to hit every single one of those marks. Miss just one, and they don't have to report. Now, once a company figures out it does need to report, all that data for every single application gets put onto one giant spreadsheet. It's officially called the Loan Application Register, but everybody in the business just calls it the LAR. This is the document that gets sent to the government each year. So how in the world do you keep track of thousands, maybe tens of thousands of entries on that LAR? You do it with something called a Universal Loan Identifier, or a ULI. The easiest way to think about it is like a serial number for each mortgage application. It's a unique code, and it always starts with your company's own special ID, called an LEI, and then it's followed by a bunch of characters that you create. And here is the absolute #1 golden rule about the ULI. It has to be anonymous. You cannot, under any circumstances, include the borrower's name, their social security number, or anything else that could identify them in that code. This is a massive privacy rule, and as we're about to see, a super common way people mess up. All right, now for the really good stuff. Let's get into the top 5 ways people screw up their HMDA reporting. You'll want to pay close attention here because these are the exact things examiners hunt for and the kinds of traps you'll see on the NMLS exam. Let's run through the greatest hits of HMDA mistakes. Coming in at #1, big surprise. Errors with the ULI and the application date. Getting that wrong is a huge problem. #2 is messing up the loan's purpose. We're going to dig into that one in a sec. #3 is incorrectly coding what happened. Was the loan approved, denied? What was the deal? Number 4 is getting the property's census tract wrong. And at number 5, we see a lot of mistakes in how a borrower's income gets reported. Okay, I want to zoom in on number 2 for a second, loan purpose. This one trips up so many new MLOs, and it's a favorite for exam questions because it's all about understanding some really specific definitions. Okay, so here's the difference, and it's subtle, so lean in. A regular refinance is easy. It's just a new loan that pays off and replaces an old one. But a cash-out refinance for HMDA reporting is different. The magic word here is how your institution considers it. It's not about the cash the borrower walks away with, it's about what your company's own rulebook says. If your internal guidelines call it a cash-out, then that's what you report for HMDA. That's the key. So, why does this happen over and over again? Well, it usually comes down to 2 really simple, kind of boring things. Someone makes a typo when they're entering the data by hand, and then there's no good system in place to double-check their work and catch the mistake. It's just basic human error plus not having a good review process. Okay, enough about the problems, right? Let's talk solutions. For our last section, let's focus on what it takes to build a really rock-solid HMDA compliance system. So, how do you actually build a system that avoids these mistakes? Regulators point to 5 key practices. It starts with tone at the top. That just means management actually has to care and make it a priority. Next, you need standardized processes and clear written policies. Then you need training that's tailored to what each person actually does. Fourth is constantly monitoring your data for issues. And finally, maybe the most important of all, a really solid final data verification process. You know, one last check before you hit send. And hey, don't just take my word for it. The Federal Reserve itself says that this final check, this data verification, is the last line of defense for getting HMDA right. It's your last chance to catch those little typos before they turn into big, expensive violations. So let's tie this all together. Look, at the end of the day, knowing this stuff isn't just about passing your exam or keeping your boss off your back. The data you help collect, that's the bedrock for making sure the entire mortgage industry is playing fair. Your accuracy helps ensure the market is transparent and serves everybody fairly. That's the real reason getting this right matters so much. So I'll leave you with a question to chew on. Now that you know where the biggest pitfalls are, what's one simple step you or your team could take to strengthen that last line of defense, that final data check? Something to think about. Thanks so much for tuning in.